What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we're continuing the pullback that we've had from the bear market resistance trendline, and we've already broken last week's low. Will we continue to see this selling for the rest of the week? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so here we are looking at another weekly chart of SPY, and we can see the weekly candle that we have from just one day of trading this week has already broken last week's low. So we are still looking like we're getting that at least 3 weeks of selling from the bear market resistance trend line. Remember, every time we rejected from here in the past, we've had at least 3 weeks of selling before any bounce. So the only hopes of a Santa Claus rally this year will have to most likely be next week and not this week. Remember, I told you throw all of that seasonality in the trash can and follow the price action. And right now with the price action breaking last week's low, we still have more risk to the downside. So looking at this weekly chart, there is a lot of risk below SPY 380 to come all the way back down to the 200 weekly simple moving average, which is still in the 360s. So if you're trying to be bullish for any type of Santa Claus rally this year, you need to set your risk right there at 380, and below that you need to jump ship on the idea that Santa Claus is coming to town and expect a retest in the 360s. Jumping over to the daily chart on SPY, you can see that we do still have two gaps to the upside, and there is still more confirmation that those are breakaway gaps while we're heading lower, because we do not need to go fill those gaps right now. We can easily fill those gaps at a later date. Now, one thing I do want you to note on the daily chart of SPY is that we are getting extremely oversold below the lower Bollinger Band, closing below the lower Bollinger Band for the second day in a row. And we have this last line of defense on the daily chart of this support zone at 378 before we more than likely come all the way back down into the 360s. Now, there was a slightly bullish event today, is that we did go down on lower volume, but you have to remember that this is a low volume holiday week. So you can't just look at the volume alone. You always have to follow the price action. So if we do lose that support at 378, we are more than likely going to see some type of capitulation event where we go straight down to 364. Now, in the short term, there is a very real possibility, being this oversold, that we could try to bounce back up to fill that gap around 387.89. But again, that's going to be a strong resistance zone where we could easily find bears yet again and continue to head lower with a lower high, lower low situation. So I always tell you, while we are in this bear market, we are expecting lower highs and lower lows. And that means we are in the bear market as long as SPY is still below 408. That is where the bear has rejected price twice, and that is where we had the double top rejection and the breakdown below the neckline at 393. So you need to be very cautious of this bear market continuing while we're below that neckline at 393, which means even if we bounce up to the 390s, we could still see a lower high around that zone and get rejected for the next leg lower. So I know this is not what you bulls wanted to see, but you need to follow price action and understand this is a bear market until it's not. So watch that critical support zone around 380 to 378, because if that does break down, we are more than likely heading back down to retest the 52-week lows. The critical upside resistance will be the gap fill around 388 and that critical resistance zone between 390 and 393. On the NASDAQ 100 triple Qs, we were down 1.64% today, and again, the triple Qs are very oversold just like SPY, and we did close the daily gap, which was right there at 268.56. There is a very good chance that gap fill could act as support and we could see some type of relief bounce, but in the short term, we are still looking for lower highs and lower lows while we're in this bear market, which means we're looking for very critical resistance around the neckline breakdown at 280. Now remember, this was a double top rejection from 293 on the break below 280 with the valid downside price target at 268. So you could say we've met that double top price target at the gap fill and we are due for a relief bounce. But again, while we are in this bear market, you are still expecting lower highs and lower lows. So even if we get that bounce, we could still come back down and retest the 52-week closing lows at 260 or make brand new 52-week lows down there right around 250. So it's a downtrend until it's not, and we're still in the bear market on the triple Qs while we're below the bear market resistance trend line, which is still that critical resistance zone at 293. On the Dow Jones, we were down 0.48% today, and the Dow Jones is closing below the 50 EMA for the second day in a row and below the lower Bollinger Band for the second day in a row, coming very close to that critical support at the 200 daily moving average around 325. We have a gap to fill just below 331 and a gap to fill just below 338. So that will be some critical resistance on the way higher, and that could still be a lower high before we continue lower in this bear trend. Remember, the Dow Jones is getting a lot more bearish while it's below the 50 EMA at 330, so use that as your critical resistance level. And if we break below support at 325, the next leg lower will be down here around 319.5. On the Russell 2000 IWM ETF, we were down 1.35%. Continuing to sell off below all of the moving averages, still in the bear trend, and the price action is getting very oversold below the lower Bollinger Band. We met the double top price target at 176 and continued selling off, broke down through the daily support at 174 and closed down around 172. So even if we do get a bounce in the short term, we're looking for resistance around 176, 178, and the gap fill just below 179. That could be the next lower high before we come all the way back down into the 160s. So do remember, this is still a very strong downtrend while we're below this critical resistance level at 178. On the ARKK ETF, we were down 3.13% today, making a brand new 52-week closing low by closing down below that support at 32.5. This opens the door for the next leg lower at 31.3 and then $30. And again, this is a constant reminder, this is still in a very strong bear market. Now, the good news for the bulls is while we are making the lower low, we are going down on lower volume. So there is the possibility this could be one of the final lows in this ETF, but we have no idea which low it's going to be, whether it's going to be 31.3, $30, or possibly even something lower. For that reason, you need to stay bearish and you need to stay risk off while we're below 34.6 and this critical resistance at $38. On the VIX, we were down 0.97% today, and the VIX is asleep at the wheel while the rest of the market is selling off. There seems to be no fear and no panic with no VIX spike in sight. This is obviously odd behavior because usually you're going to see the VIX heading higher on a day the SPY is heading lower, but we just did not see that today. However, this is still a volatile market while the VIX is above 20. And we're looking for the next spurt of volatility on a VIX breakout above 24. If we get the VIX crushed down below 20, that's going to be more in line with a bull trend. But as you can tell from the price action in the indices, we are not even close to a bull trend at this time. On Bitcoin, we're currently down 0.91%, and Bitcoin is still trading below the 20 simple moving average and all of the other moving averages as we're heading down towards support towards 16,000. The Bollinger Bands are very squeezed, so we're very likely going to see a large move in Bitcoin. So if we do break down below the support, the next leg lower will be 14,395, and you can't get bullish unless we could break above the resistance at 17,550. On Amazon stock, we were down 3.35% today as Amazon broke down to a brand new 52-week closing low by closing down below that support at 86. This opens the door for another leg lower at $80 and then 77, and you're now looking for possible resistance in Amazon around 86 all the way up to about 88. We need to get all the way back above 97 to start looking more bullish, so do respect that this is still lower highs and lower lows and still breaking down to brand new 52-week lows, which means we could be heading for that next bear market leg lower. On Microsoft stock, we were down 1.73%, and Microsoft did break down below that critical support at 242, and we do have the gap to fill just below 229. So while Microsoft is below 242, you need to be cautious for that gap fill below, which is obviously going to likely send the indices and the Dow Jones much lower if we see Microsoft dropping to 228. If we can break above 242, we're still looking for resistance around 245, 248, and 252. So you need to be very cautious while we're below all of this resistance and seeing Microsoft selling off on increased volume. On Nvidia stock, we were down 1.91% today, and Nvidia lost that support zone at 166, so we did not get the bounce up to fill the gap at 174. So this is obviously bearish price action, and you need to be paying attention to that. Below 166, Nvidia is likely heading down to the critical support zone at 156, and if we lose the critical support at 156, you're looking for the gap fill at 142. If we do get a bounce now at this point, you're going to be looking for resistance at 166 and 173. And if we could break above all of that, we could fill that gap at 174.2. So the hopes of a dead cat bounce rely on the break above that resistance at 166, and then we could see continuation of the bounce to fill the gap. But even then, we are still looking for lower highs and lower lows. In Tesla stock, we were down 0.24% today, and Tesla tried to break down below the critical support zone right here, right around 150. Intraday, we were trading as low as the 146 range, and we are getting very close to our double top price target at 138. We had the arrow arriving to the price target today, but it could take longer in the week before these Bollinger Bands expand, allowing price to head lower, and we are still seeing very high volume selling on Tesla. So do not forget that is still the valid price target while we're below the neckline at 168, and we're very likely going to arrive there this week. From there, we could see a Santa Claus rally in Tesla next week, but it does not look like we're going any higher this week while we're below 155. If we could break above 155, the next resistance will be that neckline at 168 and 173, and we can't get bullish until we see price action breaking above all of that resistance. On Apple stock, we were down 1.59%, and Apple filled the gap at that level at 133, so there are no more gaps to fill in Apple stock because we also filled the gap at 138, and we're getting extremely oversold on this big tech name that is now 3 days closing below the lower Bollinger Band. So with the gap filled to the downside and getting extremely oversold, it would not be surprising in the slightest if we see Apple starting to get a dead cat bounce to form another lower high. Lower high potentials will be resistance at 135 and this previous breakdown around 141. But we do not have to go as high as 141 to get a lower high. We could get rejected anywhere in between and still get another lower low back down towards support at 130. But with Apple getting this oversold, I think we're going higher before we go any lower. So manage your risk right around that closing low around 132, and you can stay long in Apple for a dead cat bounce as long as we're above 130. On the financials, we were down 0.89% as the financials are still closing below the lower Bollinger Band and getting very oversold at these levels. So there is very clearly lots of sellers in the financials with this critical support down here at 32.8. The industrials were down 1% today, finally closing the gap at 97 and holding up above that rising 50 EMA, so look for that level to potentially act as support. The healthcare sector was down 0.78% today, holding that support at 134 and possibly going to bounce up to fill the gap at 137. The energy sector was down 1.03% today, losing support at 84, which means we're more than likely going to see the energy sector coming down towards the rising 200 daily moving average at $80. So jumping back over to the S&P 500, without a doubt we are already starting off the week with a very bearish tone, breaking down below last week's low and getting that third weekly rejection from the bear market resistance trend line. So don't just assume that a Santa Claus rally has to happen. Follow the price action and make sure you're managing your risk around these critical support zones. If we do continue to capitulate this week, that will increase the probability that we could still see a Santa Claus rally next week. But again, just follow the price action and throw all seasonality out the window. Just make sure you know your risk levels, manage your risk around those levels, and have a solid trade plan that's prepared for any scenario. This is a very volatile market, so if you don't like trading volatile markets, just sit on the sideline and wait for the VIX to start closing back down below 20. Also, don't forget I have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. I think now is the best time to be a bank member, so if you want to learn more or want to subscribe, just simply click on the link in the description of this video. If you're looking to become a better price action trader, come join us at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.